What's going on, guys? And today I'm back with another video, and today I'm going to be going over the concepts of liquidity voids, fair valuation, and fair value gaps. So if you guys have paid attention to previous videos that I've made on my weekly markups, just live trades, just anything with me and a chart, I tend to talk about certain concepts that I go by imbalances or fair value gaps. And I know a lot of people don't really understand the full what they mean. I have a few videos on them in the past, but I'm going to go more in depth, and I'm going to be talking about a little bit more concepts than I usually do. And hopefully this video gives you guys a better understanding of how I personally use these fair value gaps. These are concepts that I've learned from ICT, Inner Circle Trader, Michael J. Huddleston. So if you want to look at the actual founder of these concepts, look in the description, look in Inner Circle Trader ICT. Can't talk for shit. But let's just get right straight into this video. So the first concept I'm going to be going over with you guys is the concept of liquidity voids. So right here, the definition of liquidity void is after a sharp run in price, the large bodies that form are the least effectively trades in a range. Sudden falls in price will leave previous price action that tends to fill in later. So right here, this concept of fair value liquidity voids is when there is a sharp run in price. So right here, when price was consolidating, price always goes from consolidation to an expansion phase. So price consolidated, then expanded. And when this happens, these candles tend to leave gaps in the market, such as this. So just like this, these big moves that happen, sharp runs in price, this is what happens. This is what causes a liquidity void, and the liquidity void is the gap it leaves in price. So when there's all up candles or all down candles, it's not fair value for buyers and sellers. For every sell candle, there has to be a buy candle next to it. That's just how the market works. And when it doesn't, this leaves an area in price that price will try to refill. And I'm going to show you guys examples of this. So I'm going to look for an example right here. I'm going to just use this one. Go back in time. I'm going to just go right here. So this right here is the consolidation that we would be paying attention to. This consolidation before this up move. And then the liquidity void that was created is created all through here. This is an area where there was no down candles, where it left many gaps in the market after expanding to the top side. So understanding this, we understand that this whole thing right here is a liquidity void, and this is going to be an area that we will eventually want to see filled in to then potentially go higher, or fill it in to potentially keep going and seeing lower prices. So now that you guys understand the concept of a liquidity void and what that means, we're going to go over fair valuation. So understanding the liquidity void that is created, fair valuation is when price trades back inside the current range it's in and returns to levels it's previously moved from. So right here, say this is our liquidity void, but then when price retraces and fills in this gap that it left in the market, this is called fair valuation because it's fair value now in the market. It gave equal opportunity to the buyers and sellers. The buyers took control here, sellers took control during the retracement for buyers to keep control. But it's now equal. There's no gaps in the market because the liquidity voids that were left get filled in. And I'm going to show you guys an example of that when I talk about fair value gaps. Okay, fair value gaps. The definition of a fair value gap is when price leaves a specific level and has a small section of price that is seen as one directional, and you would want to see these areas get filled. They tend to be filled, and I'm going to show you guys that by using these candles right here. So without going over anything, I want to explain why the wicks are very important. The wicks are very important because these are the areas that price is going to leave the gap in the market, and these gaps are areas in price that price is going to want to retrace to at some point in time and fill in these areas, because liquidity voids are created when there's a big expansion in price and the large body candles leave gaps, and those gaps are fair value gaps. And then the retracement to fill these gaps is fair valuation. So understanding that, now let's look at what these gaps will look like with actual candles. So paying attention to all these arrows all mean something. These arrows are showing you where the fair value gaps are. So when you look at a fair value gap, you want to keep in mind you have to look at 3 candles at least to show you a fair value gap. Not 2, not 1, it has to be 3. There has to be a gap in between the first candle and the third candle. Meaning, looking at the wicks, if the wicks aren't touching, cutting through this candle, if they don't touch, there is a gap in the market, meaning fair value gap, such as this. So when you guys see me mark up FVG on my markups, that is what it means. A fair value gap that I would eventually want to see get traded to. And the same thing up here. Gap, gap, fair value gap. The one thing you would want to see happen to possibly predict where price is likely to go, you could see something such as this candle right here, where price will have a down candle. The wick will fill in this area, but it will still be bullish. And then the next candle could potentially just keep going higher. And I'm going to show you guys actual candles examples itself, but this is just so I can show you guys another one. So this is something that could happen just like this, or price could potentially keep going lower to fill in this next fair value gap that we have all the way down here. Fair value gaps aren't areas that price is going to have a reaction from. It is areas where price is going to and from. So just like price rejected this fair value gap, used it as a type of support after filling it in. This could have been a short-term trade depending on whatever time frame you're on, depending on maybe it had a confirmation for your fib or something like that. But it doesn't mean price is going to stay above. As you can see, something can happen where price comes lower to fill in another fair value gap, where then you have to look for other confirmation to potentially take these trades. But now that you guys understand the basic concept of what fair value gaps are, what liquidity voids are, and what fair valuation is, we're going to look at concepts in the chart itself. So right now, the first one that I notice is right here. This major drop in price leaves a liquidity void behind. So understanding that, what would we want to see next? We would want to see a potential fair valuation retracement to fill in these fair value gaps that were left. Because if you look at all these candles from here to here, we have a fair value gap. From here to here, we have a fair value gap. From this candle to this candle, we have a fair value gap. So these are all fair value gaps using 3 candles, using the wicks, looking at the gaps. So we understand that this right here was a liquidity void, leaving fair value gaps in the market that we would potentially want to see traded to fill in before potentially seeing lower prices, or potentially just doing whatever it does and goes higher. But we just know that these areas are potentially going to want to get filled, and the best thing we could do is look for possible scenarios to get long into the market, because we know price could likely keep going higher, or we know price could likely come fill these areas before potentially coming back lower. So what happens from here? Price starts to fill this first fair value gap, but then wants to keep going higher. Almost fills this one. Uses it as a support or resistance. Trades back down to 34,500. Then trades even higher to come into this last fair value gap. Trades to 35,000. Holds below. Fills it. Comes right through. Before doing what it's going to do. Potentially go higher. Just like that. But you can see these previous fair value gaps could potentially be used as support also, because these are areas in price that we knew price was likely to go to. This isn't a confirmation by itself, because you see 34,800 is a level. And if you also do something such as maybe pull a fib from this low to this high, you will see that that's also where price is rejecting. That's why I'm a confirmation trader, and I use multiple confirmations when I'm entering trades. So I'm going to find you guys another example of this also. So one that I see, I'm going to find an example where price retraced during a fair value gap, filled it in, and then retraced. So I'm going to look for a specific example right now. I'm trying to see. I'm trying to scope out where potentially this could have happened. Let's go down to a lower time frame. Right here. I'm gonna look at it just like this. So what I see right now is price left the liquidity void in the market all through here. Big candles leaving gaps, left fair value gaps that we have from that wick to this wick. So you can see price retraced. What would this be? This would be fair valuation because retracing, filling in this. So now it's fair value. Trades down to 34,800. Rejects. Basically fills this full fair value gap before pushing higher. Mind you, like I said, these aren't the only confirmations. We have other confirmations. As you can see, rejected to 62% also. And you can also see that there's other things here that we would be looking at. But just going off the concept of fair value gaps, you can see price rejected it. Then what happened afterwards? It started to push away. But then came back to do what? Fill in fair value gap that was left right here. Retrace to it, and let's see. If you don't know what I'm talking about the fair value gap from here to here, these candles. Then you can see price retraced down. Now it's using this as a potential resistance, and let's see what it does. Uses this as, after it fills it through, you see price starts to lose all of its momentum to then trade back lower. So these fair value gaps could be potentially used as support resistance also. I don't use them as support and resistance. I use them as areas that price is likely to go to and from. So I use them as targets. So that's really it. This is a simple concept that you just got to train your eyes to look for. You got to understand why price moves where it does and understand what it's trying to do, what it's trying to fill. Because there's examples everywhere on every single time frame. Every single time frame there's fair value gaps. As you can see, we have one right here that is going to eventually want to get filled in my opinion, because we know US30 is very bullish, so we would know this is going to be an area that we want to get filled in. And if you look at areas such as the short term, we're just going to show you examples of price getting filled. You can see price got filled here. We could see the fair value gap that was here eventually got filled. You can see that the fair value gap from here to here eventually got filled. I can show you guys examples day in, day out. You can see right here, price came in, filled this fair value gap, then reversed after filling it, because why? There was no more fair value gaps on this time frame besides the one all the way up here, and price didn't want to come higher. So from there, rejected. But like I said, I'm going to keep telling you guys, this isn't the only confirmation. As you can see, we had fib levels rejection here. We also had this 1 hour order block rejection here. So these are things that you can map out to potentially look for trade setups. You don't use these by itself, but this is a video strictly for understanding fair value gaps and understanding liquidity voids in the market. So one last time, don't use this as a confirmation by itself. Use this along with other confirmations to give you high probability trade setups. And you guys also got to know that the higher the time frame, the better. I usually like to use 4 hour and daily fair value gaps because I know they tend to get traded through. If you guys were paying attention last week when I was talking about this fair value gap that I wanted to get filled with US30, you could see price filled it. And now where is it trading to? Trading lower. And if you even look at this fair value gap that we had on the daily chart before, you can see how this area and price got filled before having a massive expansion to the top side. If you would have tagged this along with the fact that this was a daily order block right here, if you also would have pulled your fib from this low to this high and saw that this was 62% rejection also, that's 3 confirmations right here that you have for this potential area. And then you can see from here, price went up 875 pips. This isn't something you use by itself. This is something you pair along with other things that give you high probability trade setups. So that's really it. Hopefully you guys got a better understanding of what liquidity voids are, what fair valuation is, and what fair value gaps are. Fair value gaps are, in a sense, another way that I used to call imbalances, inefficiencies, gaps in the market. There's a lot of ways you can go about them, but at the end of the day, it's the gap that price leaves when it has sharp runs up or down. So hopefully this video was helpful. Hopefully I taught you something new. Hopefully I gave you an insight to how I trade, another insight to something maybe you didn't understand before. So make sure you like, comment, subscribe, click this button right here, subscribe to my channel. Trying to go to 1,000,000 subs. You already know what it is. We're gonna get there one day. But until then, I'm gonna keep giving you guys this free knowledge, free game, because this is what I like to do. This is something I'm passionate about, and that's really it. So hopefully this video helped you guys get a better understanding of what fair value gaps are, how they're used, and the way I personally use them. And that's really it. Like, comment, subscribe, and I'll see you guys in the next video.